Gold sleeping, silver stepping up, and oil at the major crossroads. This is the Weekly Commodities Digest by Investing Angles, where we decode market signals before they become headlines. Gold shows weakness. Does it have any force behind it? Silver is more assertive than gold, and the prospects of a fall come with historical echoes. GDX miners flash caution. Are they bracing for a deeper drop? Oil, pause or pivot? A critical level is in play. Coffee brews trouble with an unhealthy signal. And natural gas? Was that it for the rally, or is something bigger coming? And today we start with gold. So what we're seeing here is the closure of the week. And from the perspective of candles, it is bullish, a bearish continuation one, and we can see that gold dropped below the 8 and 20 days EMA, and this means that it lost very significant levels. If we look at the weekly frame, for example, so we can see that after a spinning top last week, gold formed a continuation candle. However, it wasn't large enough to confirm the reversal. So for that, we need gold to drop below this level. And so far, we can see that slowly it's building a momentum. If you look at the 2-day frame, we can see that this technically a confirmation of a reversal on the 2-day frame. If we look at the 3-day frame, we have a strong bearish engulfing, and another candle is brewing right now. It will close on Tuesday, and we would be able to know what kind of momentum we are looking for. If we look at the futures, gold futures, they are slightly more convincing, and I'd like to say that the weekly frame closed below the open of this green candle, and it means that we have a minimal confirmation at this moment. However, we need to see a bigger move down, particularly breaking through support levels. Now let's have a look at Elliott waves. So the wave remains the same as we charted it a few days ago, and after potential impulse of the top, we are seeing wave 2 or maybe wave B, and right now the wave is starting down. So far the wave is fairly small, and we need to see it develop to much bigger one before we start projecting targets and the next moves. So far this wave is developing, and but interesting thing that if we look at the momentum, for example, and the MACD, you remember that we discussed MACD daily cross, bearish cross that happened a few days ago, and this cross was of a record magnitude, bigger than the one in 1980s, which led to very significant decline. So far we are tracking to see how this momentum builds. So this is the 2-day frame. We are seeing that the momentum, the MACD is about to make a cross also, and this would be also the one of a record magnitude. This line here represents the previous high. And if we flip to the 3-day frame, so there is a very similar signal brewing, and once we have this cross, maybe in several days or maybe even weeks, we will start estimating based on this. All right, so now the final discussion for gold is the GLD closure of the day and of the week. So for weekly, it wasn't sufficient to confirm a reversal here. It needs to be below 294.53. Speaking about the daily, we can see that slowly it is losing steam, and the Friday's candle, the red candle, technically capped any potential bullishness of this little doji, breaking below the 20 days EMA. And now we have two gaps practically closed. Let's see if we can close all of them. So far, this frame is bearish, and if you look at the 2-day frame, we have also confirmation of a reversal on the 2-day frame, similar to what gold did. So the GOD and gold are aligned at this point. All right, so that's gold. Now let's move on to silver and see what the metal and its candles are trying to tell us. So from if we compare silver and gold, silver is more decisive at this moment, and this is because it formed a very strong bearish engulfing on the weekly frame, and this could potentially be the beginning of a falling three methods bigger pattern here. And on the daily frame, silver is falling, and this candle is neutral bearish as a candle, but it has very strong technical support. Multiple indicators support the move down, and I'd like to say that this is a freshly made 8x20 EMA bearish cross. If we look at the monthly closure, it was an amazing one, and it closed just a few basis points below the necessary line for forming a bearish candle. Now we have a strong bearish hammer and at the same time a dark cloud cover. So this multiplies the odds, and the chances for a red May and beyond are significant at this moment. I'd like also to bring this one on the table. So this is the 4 months closure. We can see that this candle is entirely within the body of this doji, and it means that it's more bearish than bullish. So if we see a very strong red candle, it wouldn't be as surprising. However, we still need to see a confirmation for either way. Now let's move on to technicals, and this is the most interesting chart that I would like to discuss with you together. So I was studying this and comparing different patterns, particularly MACD, and I found that the current formation very similar to what silver did in 2021, 2022. So this is potentially a triple top or a triple mountain, three mountains in candlestick terminology. And now we can measure it and try to see whether we see any resemblance with the previous pattern. So this is the triple top, and we can measure it here, and now we can see that the measured move technically brought silver down here, and the decline was, you can measure it approximately, so it was about 40% loss of the top over the period from January to August 22. So that was like over year and a half of decline here. So if we from technical perspective, I'd like to say that this this formation is very similar, and very many technical indicators that I track, they support the idea of triple top here. And now let's try to measure it approximately. So this is most likely a very similar foundation for this top, and this is the top itself. You can see that we have 1, 2, 3. So some might say it could be head and shoulders. However, well, some people like it measuring it like with head and shoulders. I prefer triple top, and this one is is the size of the top. And now if we try to measure it, the potential perspective move, so it would be somewhere here. And now we can put some targets. So it's about 2021, and the decline would be about 40%. So technically we would be looking for something similar to what silver lost in 2021. So that's the perspective. And I'd like to say that now we have bearish closure of the monthly frame, and this 15-day frame obviously was also bearish. Let's see how it develops. So far we still need a confirmation, because this closure, I'd like to show you back. So this candle still requires a confirmation on monthly frame, but this is the perspective from technicals, and I will keep it in mind, and we'll be monitoring together. Now let's have a look at Elliott waves. So far this was our initial chart. We've been tracking since the beginning of April. I think it's in early March too. So we have an impulse, potential impulse down, possible bearish flag, and now I can see that silver starts to develop an impulsive wave, and this is a specific concern. So potentially this wave 1, 2, and I'd like to, this is this one. Potentially wave 1, 2. Now this wave develops as an impulse as well. If it gets extended, then I would be looking for it as potential wave 3 of larger wave 3. And also we still have these possible paths here, the blue one, A, B, C of a bigger B. It's still on the table, and that's the perspective so far. But given the recent signals, bearish signals, I'm expecting silver to go down. At this point, the target is at least this one, 30.791, but it could be lower. And the final one I'd like to discuss is SLV Trust. So what we are seeing is 2-day candles are bearish, confirmed at top, and the daily is also falling down. Bearish potentially formed a double top here. On the weekly frame, strong bearish engulfing, no questions here, and the monthly closure was with a strong bearish harami, and at the same time it's a hanging man or hammer. Well, that's the perspective for silver. Now let's move on to the next part, is GDX miners. Just a quick update. What we are seeing here is the daily closed with bearish candles, very good chance to continue down, and the weekly, technically this candle confirms a reversal on the weekly frame after strong bearish engulfing of the previous one. If we look at the monthly frame, so far it's nothing super concerning. This candle could be a spinning top because of very high legged upper and lower shadows, but let's see how it develops. So there is no concern at the monthly frame so far, but the weekly is already confirmed a reversal. So the next week and maybe a couple of weeks are expected to be bearish. And our chart that we track with GOD, potentially I was looking for two types of ending diagonals. One is in blue count, and another one in green. So far I think that this potential impulse has been invalidated, and there is a good chance of moving lower. So far, the preliminary target is 36.26, but if this line is crossed, then the 21.52 is opening up. That's all for GDX. Now let's move on to oil, and let's explore the candles first. So after 3 black crowds, we had a consolidating doji, just to reset some technicals, and the oil had a chance to form a bottom here, but it was rejected, and now we have 2 consolidating candles. Most likely oil will continue to move down next week. Maybe it will form another consolidation candle or so, but the direction right now is fairly clear, so it's going to be down. The same for the 3D frame, 3-day frame, 2-day frame closed with a neutral doji, which, by the way, might give a reaction upward, but considering the daily and the weekly closure, this I would be cautious about it. So the weekly closures practically moving down and expecting further declines. However, we might see a consolidation, like for example, it happened here, like three consecutive weeks of consolidation before the next leg starts. Speaking about the Elliott Wave, the chart remains the same, no changes here. After a very strong impulse down, we have an APC closed with an ending diagonal. This ending diagonal practically already played, and the oil returned to the level of origin and surpassed it. 1, 2, 3, 4. However, I think that wave 3 might get extended a little bit lower based on some technicals. This would be the next target, potentially wave C, but wave 3 I would expect it to go much lower here. And our regular update on ExxonMobil, Chevron, and ConocoPhillips. What we are seeing here is a failure technically to form a rally, and Exxon completed the week with a dark cloud cover, and these candles, similar for Chevron and Conoco, they are not bullish at this moment. I would say they have more consolidation power, and we would see another move down. That's the perspective. If you're interested in the bigger picture, I will be discussing it with our members on the website, posting midterm and long-term projection, analyzing monthly closure, and so on. So it will be posted in the next couple of days over the weekend. Now let's move on to the next update, and this is coffee. So coffee formed a few concerning candles over this week. It started with a dark cloud cover on Tuesday, and it was confirmed on Thursday, and now we are seeing it continues to move down. If we look at the 3-day frame, we have a very strong bearish engulfing on the 3-day frame, which closed yesterday, which closed on Thursday. So this solidifies bearish odds, and now we are looking for a continued move down in the next 3 days or more. The weekly closed with a hammer, bearish harami, and the monthly closure was also bearish inside candle, and now we are seeing the results of it. If we look at the chart, So this is the projection that I made today, and I think that this was the very first wave down, and this is going to be continue the decline. So this is just the first wave of the correction. The question is now what kind of correction we are going to see, whether it's going to be an A, B, C, and potentially lower, or it will be a more complex wave B here before getting to wave C. So far, it is coffee is bearish. And the final commodity that we are going to discuss today is natural gas. What we're seeing here is that after our call on Friday, natural gas made a strong move on Monday, and this was just the initial move of a much bigger rally. So far, it looks healthy, and we can see a freshly made 8 by 20 EMA bullish cross. The weekly candle is bullish kicking, very strong one, and it's pushing above major support lines. Now support lines 8 and 20 EMA. It's still below the 200 weeks moving average, but I think it's just a matter of time until it breaks above. If we look at the monthly candle, it was a very interesting closure. Just a few days before the end of month, it was looking like a big reversal, losing major support lines and everything. But in the last 3 days of the month, it was greatly pulled back and technically stick saved. And now even the candle remains bearish engulfing. The technical support is very weak, and I have a better we have a better chance that this rally will continue, and on the monthly and the bigger frames everything remains healthy. Again, we will discuss it at a greater length and the larger perspective with our supporters on the website. This is the perspective chart that I shared a few days ago, saying that we would be looking for these two potential paths, either the green one for wave 1, wave 5 of one of a bigger ending leading diagonal, or if this leading diagonal in red already completed, then we would be looking for an impulsive wave. I think that after Friday's move, we can safely remove this one as a blue pass as much less probable at this moment, so leaving the green and red active. And another chart I'd like to show you, this is that we discussed also starting in April 20th, saying that natural gas potentially completed an ending diagonal here, and if this is the case, then we would be looking for a quick return toward this level, and it looks like natural gas is well on its way. Now, I would be considering this wave 1, 2, however, the question is about this gap. We would never know what will be in this gap, what kind of wave and what kind of support. So far, the working hypothesis is just this wave 1, 2, wave 3 potentially would be somewhere here, and so on. So let's see where the next turn happens. Well, that's the perspective for natural gas, and now let me wrap it up. So markets are shifting fast, and the signals across commodities are anything but subtle. Whether it's gold losing its grip, silver pressing lower, or natural gas sending mixed messages, the next moves are forming right now. This is investing angles where every candle speaks, every Elliott Wave whispers, and we map the next move before the herd even blinks. If you value early signals and if you found value on how we track the turns before the crowd catches on, this is the time to subscribe. We are building a community of traders who rely on deep technical signals, not headlines. Starting May 1st, daily episodes will release to subscribers first, up to 3 days before the public sees them. The weekly digest, including this one, will be members only for a full week. Click the join button below the video and choose a tier that fits your focus. Early access starts right away. And all right, so that's all I wanted to say. So let's keep the edge sharp, and we remember that at investing angles where every candle speaks, we map the next move before the herd even blinks. Thank you.